morning, everyone, and welcome to Mindspeak, and thanks for coming today. It's appreciated. Thank you for making the time to come here today. It's a pleasure to have you all, familiar faces, new ones. Thanks again. I'd like to just thank the Intercont for being such good supporters of us ever since I desperately needed a venue in 2011 for President Museveni, and they came to my rescue at the last moment, so I'm grateful to them as well. Today, I thought, I would try and sort of take a view around the world, then come to Africa, then come to Kenya, and then take some questions from anybody who has them. It's therefore my pleasure to start, and if I may, I'll start now. This is still my favorite quotation by anybody. This man, and I'm sure Ian, who's in the front row, will know who he is. He made over £1 billion with George Soros betting against the pound. His name is Stanley Druckenmiller. People always remember George Soros, but this is the man who does the trades for George Soros. He's done it for 30 years. Soros has the ideas, but Stanley is the guy who actually does the trades. And what he said, and I still think it's right, is he says, as a macro investor, my job for 30 years was to anticipate changes in the economic trends that were not expected by others and therefore not yet reflected in securities prices. And I suppose, being Kenyan, this would apply, for example, with the interest rate capping bill. One should have anticipated that, really, and I'm kicking myself that I didn't. But as an example of the kind of thinking that I think all of us should be trying to sort of use, I think Stanley still says what it really takes, I think. If you look at the world as it is today, I think it's full of friction in a way that we haven't seen in other places at other times. Where are these friction points? Before I get to that, I saw this quote this week from Mao Tse-Tung. That's Andy Warhol's pictures of Mao Tse-Tung that cost millions of dollars now. Everything under heaven is in utter chaos. The situation is excellent. What he was, of course, referring to was that for a revolution to happen, chaos is obviously the optimal situation. But it sort of describes how, if you look at the world, what it feels like and looks like right now. Donald Trump. And I think Donald Trump belongs in this sort of new age of populism that saw BREXIT, that has seen interest rate caps here. And currently his odds to win on the prediction markets are 34.4%. And this has gone up. And I think, really, it's a trading buy. If I was a trader, if I was trading Trump versus Clinton, I think that has room to go higher. And I think the markets are underestimating that this really is a 50-50 bet. And if things go in his favor, he's going to win. What do I mean by things going in his favor? It could be anything. It could be an attack in the US 48 hours before the election, and he points and says, I told you so. Could be anything, but I think it's a 50-50 toss-up. And it has tremendous implications for how America operates in the world and for the rest of the world. And a couple of weeks ago, I was listening to the BBC, and the BBC was saying that, we got to fact-check Donald Trump. And they fact-checked him, and what he said was incorrect, but it doesn't matter. We're in a different environment today. And that environment was described by an American army general who was asked to describe the future of warfare. And this is what he said in 2012. He said it in 1996. One of the defining bifurcations of the future will be the conflict between information masters and information victims. Information warfare will not be couched in the rationale of geopolitics, but will be spawned, like any Hollywood drama, out of raw emotions, hatred, jealousy, greed. Emotions rather than strategy will set the terms of information warfare struggles. And you see that all around the world. It's not about the facts, it's about the emotions. For example, when Hillary Clinton had this attack, what people are calling pneumonia, but others are saying was not, and I had a conversation with Ian again about this. Ian saying, no, she's just getting nervous that she's going to lose, and she passed out. But a lot of people, for example, were saying on the internet, this was a body double. And this is what I mean about information warfare. Whether it is a body double or not is not relevant. This is a whole bunch of people are thinking that, and you can't sway them. And the final point on this whole digital side is that if you think about it, what has changed is this. And this is from an article in Bloomberg. They call it a digital panopticon, where at any moment our actions may be observed, videotaped, and uploaded to the internet. Anywhere, right? Even here. Right? The web has democratized publishing, creating what law professor Glenn Reynolds has dubbed an army of Davids, willing and able to attack the powerful. Nor that the amazing proliferation of data and records on the web has given those Davids an array of weapons far more powerful than a slingshot. Why has the news not reached Hillary Clinton? But really, if you think about it, the same thing has happened here. You could be having a coffee with somebody and anyone could take a photo of that. Before you know it, it's all over the internet. The person who I think, the leader in the entire world who's been most effective at utilizing this new world is, I think, Justin Trudeau. And if you follow him, he's worth following on Twitter because he is like a natural exponent of this new 21st century. And he's doing it in a way that is very intuitive, but is very, very powerful. He's demonstrated the political effectiveness of virocracy as a governing strategy, a way of overcoming criticism and skirting controversy by the sheer power of his viral personality. And I think, you know, if I was a leader in the world today, I'd be analyzing him very, very closely because I think he's been highly effective at utilizing social media. He's governing, but at the same time he knows how to redirect attention. If it's a difficult decision he's making politically, there's a massive redirection. It's extremely subtle and very, very clever. We've got to touch on Putin. This was Putin at the G20 in Brisbane. You'll see he's right on the right-hand corner facing us. He left early. That was, he was an outlaw in 2014. In 2016, he's back. He's right there. He had the most meetings at that G20. I saw a list of all the leaders. Obama had 3. He had about 15. He met with practically every single world leader. And it just speaking to how, you know, he has made an extraordinary recovery, and I think one should really appreciate the extraordinary rebound of Vladimir Putin, even to the extent that you have someone like Donald Trump praising him, and you have he's made an incredible rebound. If you study body language, these photos are amazing, aren't they? I mean, you really wonder. And President Obama's always he looks at him in this kind of way, and I don't know what the personal chemistry is, something worth looking at. There was no red carpet for President Obama, And there is no way that's a mistake. You had how many leaders coming to that G20? Every single red carpet was laid out, and there was none for President Obama. And sometimes small, little things mean a lot. And I think what it's telling us is that President Xi Jinping is playing hardball. And it has also a very big ramification for US-China relations. Where this game of hardball is being played is in the South China Sea. The pivot to Asia, which was Obama's big foreign policy document, which was about pivoting the US more into these fast-growing parts of the world in Asia. It also, if you look at the document, talks about a policy of containment, of containing China. And this is where you're seeing the Chinese trying to muscle and put pressure back on the Americans, and you're seeing the Americans trying to pin China down. And the reason that the South China Sea is the key area where they can pin them down is there's a choke point. China imports all its oil, it imports its commodities. If you own the sea, you theoretically own China as well. As I said, one of the key elements of the pivot to Asia is the air-sea battle concept. This concept envisaged the battle beginning with a blinding attack against Chinese anti-access facilities and incorporated distant blockade operations. That's the important phrase. You can't go and have a blinding attack in this day and age. It would be the end of the world. But you can blockade China from a distance. And the point is, China's dependence on foreign oil is increasing, US dependency is decreasing, and I think there's a huge oil and gas find from Mozambique all the way up to Somalia. And I think this will become more and more important as we go forward. And therefore, control of that energy is going to be very key, I think, from a geopolitical point of view. And that if you are considering distant blockade operations in the South China Sea, you also have to look at the Indian Ocean. And therefore, if you think about it, the Indian Ocean, if you think about it from an oceanographic point of view, the Indian Ocean is a part of the South China Sea. That fellow was called Ali, he's a navigator, and he took me to Wasini Island. I like the photograph. But, and I think this is important. People keep asking, you know, why are you talking about control of the Indian Ocean? I'm talking about control of the Indian Ocean because I think there's a ton of oil and gas that's in Tanzania, in Kenya, in Uganda, in Mozambique, in Somalia. And I think that is going to become more and more important. And therefore, to control the route that this oil and gas is going to take, which surely is going to be mostly to Asia for now, is going to be very key. The Indian Ocean economy has been a free trade zone for centuries. And the reason for that is quite an interesting one. And it is, if you look all the way up, you could come from India, you could come from as far away as Indonesia, China even. If you look at history, the Chinese came to Pate and to Malindi in the 15th century. And the reason they could do that was because of the wind. It's called a reversible escalator monsoon wind. And what it does, it goes from Asia, it comes all the way down to Maputo, it can bring you, it then turns around and takes you all the way back. And all within 12 months. This is how all the dhows used to come to Mombasa, etc. And that was really the beginning of the Indian Ocean as a free trade zone. Today there are 3 billion people, if you look at that as an economy. And that is what is really exciting for us as well, is that we are an access point to a market of 3 billion. How we go and play that, we're going to discover. But still, the point I'm making is that the Indian Ocean is going to be a resurgent economy, and I think it's a very exciting time. This comment, I went to TCAD, and you know, it's quite often, why I like going to these things is people often tell you how they're thinking. And Prime Minister Abe said this: Japan bears the responsibility of fostering the confluence of the Pacific and the Indian Oceans. What's he telling you? He's telling us that he too has an interest in the control of the Indian Ocean and the South China Sea. He's telling us very clearly. And therefore, I see Japan, India, which thinks of the Indian Ocean as their backyard, and the US as taking a more forward position in the Indian Ocean to counter China. And I think we should watch and see how that develops. Let's move on to the markets, if I may. This was a survey done in the FT, which was saying, what do fund managers consider the biggest risk to the financial markets? And the biggest is that the EU disintegrates. Second biggest, Trump. Third, China devaluation. Fourth, US inflation. Crash in European bond market. Announcement of helicopter money. Terror comes right down there. You wouldn't think that, would you, when you look at the news and how much terrorism has, that it would be considered so low. Look at these. I got this from a Bloomberg report about why voters are angry. And this is it in terms of the middle class. The middle class from 2000 to 2015 in all these countries has reduced. Right? So when people talk about increasing prosperity, it actually is not the case. This is why people are unhappy. Look at unemployment in Europe, 22.1%. Amongst the youth in Spain, I remember we were in Maputo and we got in the taxi and it was a white guy and my wife was going, wow. And I said, look, everyone needs a job. The guy's gone for a job. And why? Look, unemployment in Spain, 45.8%. Half of this room would be unemployed. Greece, 48.9%. And it's the same story in most of those southern European countries. Even in China, look, this is the number of protests per day in China. Look at this. It's going up. So just to touch on that, the problems that we're seeing are actually all across the world. They're not just, you know, we tend to think in Africa, oh, we got our challenges. These are serious challenges elsewhere. These numbers are not small. I think this advert made Brexit move the dial about 10 points. This was the advert that Nigel Farage put up about 3 days before the vote. And this goes back to the issue I was showing you about the biggest risk. And I think actually Brexit makes it more risky for Europe. Frexit, if they had a Frexit, I think the French would vote to get out. In Nexit, Netherlands, I think they would vote to get out. Italy, they would vote to get out. So the question is, are we going to have these votes? Probably not, because they know what the result's going to be. But how are they going to avoid that is going to be very difficult. So the point about this advert is that really I think it's got mixed up with immigration. And if you look at it, you know, this fear that millions and millions of people are just waiting to cross the Mediterranean to go into Europe. This is the odds checker. Odds checker means what did people expect before the vote on Brexit? And if you look at it, the market got it completely wrong. A day before, I think it was 2080, if I'm not mistaken. That means people expected Brexit, 20% of people expected Brexit, 80% did not. That's incredible. 24 hours before a vote, that they got it so wrong. And look at how the market reacted. That was the pound. And that's the reaction from like 2 in the morning when you see it at 1:49 or a little bit, it was maybe in the late afternoon actually. And then you see this enormous price drop. What does that tell us? It tells us 2 things. One, people that are not polling, there's something major going on in the polling that's not coming through. And this is why I think also is working in Trump's favor. I think there's a lot of stuff that people are not admitting in the polls, but then when they get in the polling station, they're doing something different. But the other point to note is such a dramatic move. I mean, that move is the equivalent, if you did it in the shilling to the dollar, 149 to 113, 19 or 15%, you're looking at the shilling going from like where it is now, 101 to like 117, 118. We've never had a move like that, ever, that I can think of. So it's really dramatic in a developed economy that you're seeing such a huge move. And I think we've seen this in several different instances, but it's worth just internalizing and realizing what a massive move that is in one of the most liquid currencies in the world. Central bankers have been printing money, and they started printing sort of, if you look at it, this is the size of their balance sheets, and you just convert it and think, how much money have they printed? They've printed nearly $20 trillion. The other people who tried to print money, of course, was Zimbabwe. It didn't work. You might ask, why does it not work for just a tiddly little $100 million in Zimbabwe? Meanwhile, these guys can do 20 trillion, and it's seemingly working. That's a different question entirely, but we can address it. The world is not fair. But the point I'm making is that this is an enormous amount of cash, right? That has no basis really in reality. It's like a fiction, but it's huge. And what it's done is it's distorted the markets. Just to give you something else, these are countries which have negative interest rates. These are countries where if you took a mortgage, you'd probably get paid every month because, think of it, it's a negative interest rate. It's pretty incredible to think. So if you have negative interest rates in Japan, minus 0.1%, ECB minus 0.4%, Sweden minus 0.5%, Denmark minus 0.6%, and Switzerland minus 0.7%. So, we've got a long way to go, notwithstanding we've capped the rates at 14.5%. But the point I'm making is that it is a very extraordinary situation when you consider it in terms of monetary policy. That means these are countries where you borrow money and you'll have to pay back less than the amount you borrowed. What this has done, all this liquidity, $14 trillion, has made bonds and stocks in the rest of the world the most expensive ever in history, according to Deutsche Bank. So it's not that these companies are doing brilliantly necessarily, it's that there is so much liquidity sloshing around the system which has to find a home. And it has made everything more expensive. The question that one has to ask is, can it be sustained? Has it ever been sustained? What happens? This is Germany, 10-year Bund. This is how much Germany has to pay to borrow money for 10 years. The line is the negative line. It came back to sort of 0%. Germany is able to borrow money up to 10 years at negative interest rates. Just put that in your mind. They're paying nothing. Japan is the same. And look at this. This is from 1986. That peak was at around 8%. Japanese yields have gone down from 8% through 0. I was thinking about all of this, and then this song came to mind. It's a very old song. No one's going to remember this song in this room probably, but it's called Hotel California, and it's by the Eagles. And the song is about a party. Everyone's come to this party, and this is this $14 trillion party. the bond market party. Mirrors on the ceiling, pink champagne on ice, and she said, "We are all just prisoners here of our own device." Last thing I remember, I was running for the door. I had to find the passage back to the place I was before. "Relax," said the nightman. "We are programmed to receive. You can check out any time you like, but you can never leave." And what my point is, that's how it feels to me in the bond market. I don't know how it's going to unwind, but it's not going to unwind, in my view, in an orderly manner. The question is, how disorderly, and when does it turn disorderly? Mark Gilbert, who writes in Bloomberg, calls it a Ukrainian chicken moment. Last week, two companies, Sanofi, which is a French drug maker, and Henkel, basically borrowed money at negative rates. These are companies which are able to borrow at a rate where they've got to pay back less than they've borrowed. That means if you're an investor in that bond, you're accepting a loss, right? There are reasons around that because of the interest rate structure, but realistically you're accepting a loss. And he talks about a time in the Ukraine when someone was offering $250 million of bonds by this company, Maronivsky Hillbro product, which according to the description in the Bloomberg terminal is a vertically integrated producer of poultry products in Ukraine. Few investors had ever heard of it, but they were getting paid more than 10% in dollars, and they all piled into it. And this guy's describing the bidding frenzy. Massively oversubscribed. A few weeks later, bird flu broke out in Hong Kong. The chicken farm was uninsured. Market immediately discounted the bonds so you'd lost 30%. And saying that moment of supreme belief when anything is possible in the new issues market will always be remembered as the Ukrainian chicken farm moment. So the point I'm trying to make is that at some point this is going to happen, right? Because you cannot continue buying stuff where you're taking a loss. You just can't do it. And how that's going to happen is a mystery to me. But if you look back in history, you know, the last big time somebody tried to do this was really, in fact, Adolf Hitler, who printed a ton of money and people had to take wheelbarrows to buy a loaf of bread. So it is a fiction, and just because it's lasted so long does not mean it can last forever. Commodity markets, because so much of Africa is dependent on this. The reason I'm showing you this is just to show you what has happened and how much we have fallen, right? Look at that peak, that was 208, just before Lehman. We were above 220 on the commodity index. Today, we're below 100. That means if you're a commodity producing country, your income, okay, don't even take it from 220. Let's go back and look at 207, 160. Now, you think of any country which is dependent on commodities. Let's go to Nigeria, okay? We'll get to crude oil, but you were previously getting 160, now you're getting 80. That's huge. And this is the case in so many different countries across the world. Saudi Arabia, Russia, Nigeria, Angola. This is oil. If you look at oil, you can see that we hit a peak way above, I think it was 140. Today we're around 43, 44. And it doesn't look good. This has a big impact even for us, because we've got some oil that's coming on tap, and it has a big impact for all the big oil producers. I'll put this photograph up because just to say, you know, who are the winners and who are the losers. If you look at Venezuela right now, it's a catastrophe, right? I mean, there's not enough food on the shelves. It's a real disaster. Saudi Arabia, very bold plan that they're trying to reinvent the whole Saudi Arabian economy. Are they going to be able to do it quickly enough? Putin seems to have survived it so far, but the thing about Putin is he has a very loyal people who support him. You know, everyone keeps thinking that we put pressure on the Russian economy, Putin's going to suffer. Putin somehow is another Teflon character. The country rallies behind him. And we see this in so many different countries all over the world. But his ratings have never come below 80%, right? And even if you say, okay, you know, we'll discount some of that, it's still very, very high. Let's get to Africa. These are two headlines from The Economist. Well, I can't remember the exact years, but you know, this is recently, or about a few years ago, we had the Africa Rising story. A long while ago, we had the Hopeless Continent story, and I just put up that because it's a good contrast. The question everyone's asking is, are we rising? You know, everyone used to run around, Africa's rising, that was the main mantra. And the question is, where are we now? Because we all need to know, and we can make our decisions based on exactly where we are. In 2014, I went to a conference in Maputo, which was called Africa Rising. At that time, Mozambique was going to be the new Qatar. The place was booming. Anybody was talking about going to Maputo, because here we had this enormous gas find. And actually, I still am bullish, but they've got a lot of issues they've got to sort out. But you know, it is an enormous gas find on the scale of Qatar. So really huge, and has a huge impact on the way world energy supplies will go forward. This is this year. This is the Eurobond. Just to give you an idea, it went from about 90 to a low of about 70. That's a huge move on a Eurobond. That means the yield, the interest that was payable on that bond went from something like 9.5% to as high as 19% in dollars. Now I'll show you our Eurobond to give you an example, but this is basically a very big move. The point I'm making is that 2014, Africa Rising, 2016, your bond is in the doldrums. That's how quickly things can turn around. What are the big political trends that we're seeing? I think, you know, whatever anybody says, I think the people have much more power than we've ever had before on this continent. And it is dynamic. The power is increasing as we speak. You see friction, you see things happening, but this to me is one of the biggest trends. And I ask myself, what happens next? President Mugabe, Zimbabwe. Today, Zimbabwe, if you look at things like, if you look at the financials, if you look at what's happening in the cities, you know, you have to say to yourself, if you're looking for a tipping point, that place is getting closer and closer to a tipping point. And how that tips is going to be really key for the country, what happens next. But what we all know is it cannot continue like this, because it's now got to the point where people are on the streets on a daily basis. What happens in Gabon, right? If you look around Africa, what happens in the DRC? President Kabila is meant to leave on December the 19th. That's what the Constitution says. What happens in Angola? President Dos Santos, what has he done? He's doubled up his loans because he was sure that the price of oil was going to recover. What happens if it doesn't? And if you think about it, if you're a leader of a country, that's the bet you're going to take. But that bet is not the right one. And I think if you look back, I go back to Ouagadougou in 2014, and I wrote this after Ouagadougou because you remember there was a president there, Compaoré, and they removed him. And I was wondering why, how did they manage to do that? And in other countries they haven't, where clearly there's been a big push to do it. And I thought to myself, you know, if you look, remember 20, 30 years ago, and I don't mean this in a bad way, an incumbent could shoot everybody in the street. No one would know other than in that country. Today, how many can you do that to? You shoot 100? You shoot 1,000? There's some place where it's just not going to work. The whole thing will go up. And I think that will be discovered in the throes of the situation. And when I looked at Ouagadougou, they got what I would call velocity. They moved quickly. It was a done deal before anyone could even react. And I think that's an important signal for those other situations that I'm describing, where anything could possibly happen. Burkina Faso, 60% are aged between 17 and 24, according to the World Bank. And I'm saying that what's clear is very young, very informed, very connected African youth demographic, which people often talk about as a dividend. It's only a dividend if everyone can get jobs. It's going to be a terminator like it was in Ouagadougou if people can't. And I think therefore this whole relationship between our rulers and everyone in this room and everyone outside this room is changing so dynamically. And it's in such a fluid situation that we've got to keep a really close eye on how it moves. And I think a rebalancing has begun. Let me look at some markets for you. The top line is African Eurobonds and the spread that they trade over US treasuries. If you go to the markets and you ask typically, you know, where does Kenya trade? People will say US treasuries plus 300, right? That's the spread, the credit spread. Like when you go to the bank here in Kenya, typically, if you take a loan, you're trading, it's government plus something, right? Because the government is considered risk-free. US is theoretically risk-free. Of course it isn't, but that's the way the market works. It considers it risk-free. And then what is the premium that you're trading over? The top line is African Eurobonds. And you can see that in January, we had a big sell-off. That is, the yield had gone much higher. And since January this year, actually the yield has been compressing. Oil credits are the orange line. People are not confident about the credit worthiness of purely oil-based economies in Africa. Therefore, you saw that big blowout to 1,000 basis points. 10% in January was the premium that people wanted on things on oil credits in Africa. So, for example, you know, big oil credits are Angola, Nigeria, and those ones. African Eurobond Index has actually done really well this year. And the big trigger for a big rally was Brexit. The day after Brexit, we saw a huge rally. And what happened was people started to think to themselves, there's no growth in Britain for the next 12 months or 18 months. There's no growth in the rest of these developed markets. We better go and look and search for yield. So you had a huge rally in Eurobond prices in Africa. Insurgency tail risk. This is the risk of terrorism and insurgents. If you look around Africa, we have this problem across the board. And what struck me is that in this graph is how much of it, it's more than a quarter of all the terrorism that we have in the world today is seen in Africa, actually. Sub-Saharan African economies. This chart was taken from 2014. I don't know if you remember, the Nigerians became the biggest economy in Africa. I remember all the Nigerians saying, look at us, we're the biggest. They overtook South Africa, overtook Egypt. And only just 2 years later, this is all reversed because of the FX rate. If you look at the Naira was at 200 when this report came out. Today it's over 400 on the unofficial market. South Africa is back to first spot. that happened a few weeks ago has overtaken Nigeria again. The big pillars of African growth were Nigeria and South Africa. They constitute 50% of sub-Saharan Africa's GDP. And they're both now, Nigeria is in recession, South Africa is marginally away from it. And what does that mean as investors? I think this is a point I saw, which I just wanted to make. Is, you know, when everything is rising, when the stock market is rising, we don't have to work that hard, right? Because mistakes are forgiven, the market keeps going up. But when the market is not going up, you've got to start paying a lot more attention. You should be paying attention anyway. And I thought this was really an interesting point, I think, because there are a lot of people who are investors here. We're in the part of the cycle when the economies slow down and administrations have to take tough measures. Situations like that require being more on the ground, to be there, to understand what's happening. The result is a dramatic shift. Firms now have analysts learning the names of politicians, prosecutors, Supreme Court justices. They've doubled the number of trips. They're scanning prices at foreign supermarkets, tracking footprints at stores, reading facial expressions of policymakers. Global fragility, they say, is unveiling institutional weakness, graft, poor governance, and low labor productivity. And they need to track them all. That's really saying you've got to do your homework. And I think that's what everybody in this room has got to do as well. If you look at, for example, the Nairobi Stock Exchange, we could have avoided a lot of pitfalls if we'd been doing our homework. And we'll come to that in a minute. Nigeria, I'm saying it's disrupted. And I find it extraordinary that such a brilliant president, Buhari, would risk it all on what I consider a bet on a single number in roulette. I was standing outside, there's a casino there, a single number. Roulette has 0 and numbers up to 36. So your chance is not very high if you're betting on one number. And that's what I think President Buhari has done. Those are the odds. Or it's like playing golf and trying to drive with a putter. You can't do it. And however much you think you can, you're not going to be able to do it. And then you've got a whole economy, over 100 million people who are waiting for you to realize that you can't drive with a putter. And how do you approach that? And when I was at TICAD, I was watching this very austere, obviously very clean living, and nobody was talking to him, even his own team. So nobody is probably challenging him and saying, guy, take out the driver, right? Devalue the currency, move on. Not devaluing the currency for a whole year has put that economy in a recession. And it's going to get worse before it gets better. Today, airlines can't even fly to Lagos because of the fuel issue. This is the biggest oil producer in Africa, and it's got a fuel issue. The Naira, which had been at 200 for a long time, promptly has now moved. But the point is, people are still nervous about where the president's mind is. They know he's come to this point unwillingly. They're not confident. If you're trying to get people to put $1 billion in your economy, you've got to give them more confidence. And if they haven't got the confidence, they're going to go somewhere else. And at the moment, Nigeria hasn't got a shilling coming into it. GDP is now negative. These are the two quarters this year. You can see how the story ran, all positive for years and years and years, boom. South Africa, now the biggest economy in sub-Saharan Africa again. You know all the challenges we've had there with what is called Zupta economics. I often wonder whether President Zuma trades FX, because when he makes his moves, the rand always goes one way, down. So I'm sure he's like, I've always wondered whether he's done it. This is to give you another example. This is what the rand earlier this year, in the space of about an hour, the rand fell from 1640 to 17. just like that. And that is a reflection of Zupta economics. Today, you cannot take risks with your economy in the way you could 10 or 20 years ago. This was when the finance minister was replaced, very well-respected finance minister, and he was replaced, I can't remember with the guy's name, he was finance minister for 3 days, and his only previous qualification was that he was mayor, ANC mayor of some small town in South Africa, and we later learned that the citizens were so unhappy with their mayor, his claim to fame was they burnt his house down. Now, when you take all of that, and you've got a respected guy, and suddenly you've got this other chap, you can see why the market would react in this way. This is a comparison over 3 years of 3 currencies. The one that has weakened the most is the Nigerian naira since the devaluation. Second is the Angolan kwanza. Third is the rand. The shilling has outperformed all of them. And I think sometimes we don't appreciate actually how well our shilling has performed. I call it the Teflon shilling. And this is, when you see it in this context, the only currency that's outperformed us in the last 3 years, funnily enough, is the Somali shilling. I won't, it's got its own reasons. But it's pretty impressive, and I think sometimes we don't appreciate that. And we don't appreciate the fact that, you know, in many of these countries like Nigeria and Angola today, there's a black market rate for the currency. You can't go to the bank and get money at the official rate. You've got to go and transact on the black market. Here, if you walk into the bank, there's a 50 cent, 1 shilling bid offer spread, and you can take your money and change it within a few minutes. This is another point I think we also need to appreciate, and this is what I call our free market credentials. This is the rand over 5 years against the dollar. It's gone from 6 to now it's about 14.5. So it's like the shilling going from 100 to 200 and something. I think there would be a revolution if that happened. And of course, you know, if this is just a chart to show you when the big moves have happened, the first green one is when they fired Nene. Then you have speculation in that second bit when Gordhan, they thought Gordhan was going to be fired, and then finally when they thought Gordhan was going to be arrested. So you can't, what I'm saying is, you know, the markets, you can behave in a curious way politically, but it has huge ripple effects and damage on your financial markets. The good news, where's the growth in Africa? It's actually in East Africa. And you can see from this map, one country on the West Africa that's doing very well is Côte d'Ivoire. And there are reasons for that as well. But if you're looking for growth today in Africa, the place it's happening is in East Africa. I haven't put Ethiopia in there. There's a little bit of uncertainty post the drought, but it's growing very, very fast. Kenya's at 6%. Tanzania, they're talking about 7.2% on Friday. Rwanda 6.3%. Uganda 5.3%. If you look at the fastest growing economies that was put out by the IMF, Ethiopia, DR Congo, Côte d'Ivoire, these are the ones. But where you can see Kenya, Tanzania, Rwanda is all in there. What is one of the reasons that this is happening? One of the reasons this is happening is because we are all still oil takers. We haven't started to export our oil yet. The biggest expense every month that each of these governments has is the check for all the oil imports. If you remember, that oil price I showed you has halved, therefore the check we're having to write is half. What has happened, of course, because then you're going to tell me, but Aly-Khan, the price of fuel at the pump has not come down by the half. Well, it hasn't. Why hasn't it come down? Because we put taxes on it. one of our previous guests here is taking a lot off the top. Henry Rotich at the Treasury has put added taxes, you've had the road levy, etc., and they've been able to improve their fiscal position by adding more tax on the price of fuel. But as a country, Kenya Inc. is having to write a check half of the amount that it was having to write in 2010 and 2011. And that means the shilling has remained firm. We don't have to spend so many shillings to buy the fuel, and that's made the big difference. Got to touch on Magufuli, because I think, you know, he made a big move with this railway, and I think he's making a move on us too in terms of oil and gas. If you think about that picture I was painting of the oil and gas running from Somalia all the way down to Mozambique, you think of it as where is the center of gravity going to be? And Magufuli is trying to bring that center of gravity away from Lapset down into Tanzania. And he won the railway, that was a big win, and he's fighting very, very hard to bring this oil and gas hub down. By basically getting the pipeline deal to go through Tanzania, Lapset is not a bankable project. Why? South Sudan. They were meant to be a part of it. They couldn't afford to build a pipe, let alone a pipeline today, right? Unfortunately. $4 billion has gone missing. They're starting at ground zero. They came, I think, a couple of weeks ago for a bailout to President Kenyatta. How are they going to write the check? They can't do it. Uganda is now going to Tanzania. That is clear. DRC, which is another big oil find, which is on the other side of the Lake Albert Basin, that surely goes to Tanzania as well. And therefore, if you look at Lapset, we've really got to look again at what that whole idea is now. Because this has been a big geopolitical victory for Magufuli, and we should not underestimate it. And when I looked at the numbers, because we were proposing per barrel a charge to Uganda of $17, Magufuli came in at 12. Now, if you are sitting in Museveni's shoes, what are you going to be doing, right? So it's not even a question, it's a question of price. If somebody comes to you and you want to buy something and they're that much cheaper, there isn't even an argument. The question is, we've got to ask ourselves, why were we so much more expensive? And that will inform us of what we have to do next. And how come we didn't know we were so much more expensive? So I don't think Lapset versus Lamu is going to happen anytime soon. So speculators sitting in Lamu, I think, let's have a little think about that position. I would prefer maybe to have a different speculative position. Last year we got very lucky with the weather. We were the only country in the whole of Africa to get more rain than it normally does. And that's helped the economy tremendously. The reason I bring up the weather is because it has a huge impact on our economy and on monetary policy. If you look back at when we've had big surges in inflation, it's been weather related, it's driven up food prices, and that has been a key driver. So we got lucky last year. It's just a breakdown of the GDP, which I've already shown you, showing into 2017 looks strong as well, which is positive. Obviously, we've got to consider that next year is an election year. And if you look at the mathematics of GDP, we always tend to have a problem around the election. We've had successes, but we've had a lot of failures. And actually, the difference between an election year and a non-election year is 1.3%. Typically, in non-election years, that we've grown at an average of 4%. In an election year, we've grown at 2.7%. This is our current account, which has improved dramatically because of the price of oil, that we're not having to pay so much for the oil that we're bringing in. This was a big problem for us because we had to fund this current account deficit. The fact that it's come down has been quite helpful. The shilling, the reason I've put this chart up is that was in 2011 when we got up to about 105, 106. We then strengthened, and we're sitting around 101 right now. But when you compare it, for example, with the South African chart, which went from 6 to 14, you can see there's a better story in the story of the shilling. However, also in election years, we tend to see weakness in the shilling. That's something that we have to consider. This famous Eurobond, which of course has been in the news, and, there's been so much news about it, but just to give you a little bit of a story so you see what has happened. Left-hand side is a year ago, January, when all the noise was out there about the Eurobond, we saw the prices drop quite dramatically. And today, our prices of our Eurobonds are, one is above 100, one is very close. And this is why last week I was saying that I thought this was the right time for the Treasury to actually issue another Eurobond. The reason is there's liquidity in the market, the rate of interest is a good one, it's around 7%, you have to give a bit extra in order to sell it. But I think it's telling us that the global markets, and this is a barometer of how the global markets feel about us. And right now, they feel pretty good, right? But what I'm saying is that might not last because we've got all these other big issues that are behind us, like, will the bond markets in Japan and in the UK pop? And if they pop, what will happen? So the Eurobond, I hear a lot of debate about it. Have a look at the price. The price tells you a lot. We peaked at above 9% in January in terms of yield. So the government had to pay about 9%, the idea was risk-free government dollar borrowing was above 9%. So you can imagine if we were going to go and borrow, we were going to be much, much higher. But this rate has now come down to 7 at the last count. Now this is the big thing. This was the governor of the central bank when he was here at Mindspeak, and he engaged us in a very forthright engagement. And I suppose we have entered a new normal post the interest rate capping bill, and there's so many different issues to consider, and I'm happy to take them in questions and answers. But we've definitely moved to a new place. The question is, how is this new place going to play out? And we can deal with those questions in a minute. Schumpeter, who's a very famous economist, talked about this process that happens, and he called it a gale of creative destruction. He says when old industries are destroyed and new ones are created. And I think the banking sector is in a Schumpeter moment. And it's going to be extremely interesting to see how this plays out. What do I mean by them being in a Schumpeter moment? Well, just think about it, right? Dr. Mwangi earlier in the week spoke about tier 2 and tier 3 banks. Their cost of funds is much higher. Now they've got a cap, so they are getting squeezed both ways. How much squeezing can they take, right? Banks which have a huge branch network, what happens next, right? Can they afford to maintain those? So what is going to happen is, we can take those questions, but I call it a Schumpeter moment. 30% price reaction lower in bank shares after that announcement. That's a dramatic move, and still we've seen a recovery in some, and it's actually, the market has been quite efficient. For example, someone like Standard Chartered has not fallen that much. Why? Because most of their business was already in that corridor. They were dealing with strong corporates, they're lending below 14.5 to these boys and girls, and they were operating in that band. And if you look at who's been hit hardest, it's those banks which were outside that corridor, right? People are saying, my God, you're going to have to come down from 19.5 to 14.5. You're going to have to go up from 2.5 to 7.5. That's going to hit you both ways. And that's why the market reacted in this very dramatic way. And then I just wanted to just touch on, this story is, banks have been hit all over the world. I just want to show you 3 charts. This chart, the most one of the most successful banks anywhere in the world today is JP Morgan. It's actually appreciated in price over the last 12 months. That's the top line. The one in blue is Barclays PLC. Okay, that's down nearly 40%. The one at the bottom, it's down 50-something%. That's Deutsche Bank, the biggest bank in Germany. So when you're putting these, what's been happening in the banking sector has been enormous and unprecedented. In fact, Barclays Kenya, which is down about 31%, has done even better than its parent, Barclays PLC, which is interesting, I thought. So when people say emerging frontier markets are more dangerous, they're less dangerous, it seems, in the banking sector, notwithstanding what we've seen. Standard Chartered and Kenya and Standard Chartered PLC have been outliers in point of fact, and they've performed much better than all the other banks. And the reason, there are many reasons for that, but it's an interesting point to note, and partly domestically it's because I was saying that business was in that band, and internationally is because they took a lot of pain about a year ago, and they dealt with their balance sheet earlier than everybody else. SGR, of course, is our biggest single investment in Kenya since independence. Pretty big deal. Coming in, of course, before the election, because you can imagine the president wants to be in the driver's seat, and I can imagine we're going to have a photograph of him with his hat saying, you know, I've done the railway. That's politics, right? I mean, otherwise, I'm sure that the Chinese are building it, realize that they've got to make that happen. I think it's a big deal. I think it's going to change a lot of things. I'm not happy about it going through the Nairobi National Park, but you know, we have one of the most expensive costs of transport anywhere in the world. If you're a manufacturer or you're investing, just shipping your goods is a huge toll on your business. And I'm hoping that the railway will smash that lower, and I think it will. The other key thing for any global economy is power. And actually, we've added on a lot of power. The problem with our power is not that we don't have enough, it's that our transmission lines are very old. We have not invested sufficiently in new transmission. We are one of the few countries on the entire continent that has a surplus of power at peak hours. The problem is we can't uplift it. Sometimes it breaks down, a monkey gets in there or something. but incredibly, the power is there. So the point I'm making is that if you think of what are the ingredients for manufacturing, how do you bake a manufacturing sector? You bake it with cheap power, you bake it with human capital, and you bake it with transportation. Go back to my thing about the Indian Ocean and 3 billion people. You've got a 3 billion market out there. You now got cheap power. You can move that stuff that you're manufacturing to the sea and get it out of the country. And all of a sudden, you've got a different situation in your economy. And I think we're at that point. My concern is that the Ethiopians are thinking along the same lines as we are as well. And the Ethiopians have less noise in their economy. If you get a decision, they've got challenges there as well, but if you get a decision, it goes from the commander-in-chief right down. Whereas sometimes here, you could have a decision with the commander-in-chief, but when you get on the ground, you've got some Maasai guys who don't want you to do whatever you're doing. You've got $60 million of hardcore capex sitting on the side of the road. So that's the difference, I think. And the question is how we go for it. But if you look at and think of it as an economy, I think it's not rocket science. Energy, transportation, and people. And we know from people in this room that we have the people. That's for sure. As I said, cheap power and cheap transport. The other very interesting thing that's happening in our economy is what I would call the Uberization. I was one of these late adapters to Uber, but Fred kindly put me in it, and I could not believe how much my taxi driver was charging me and how much I was paying Uber. So the first thing to say is that it has driven down all our costs in this room really dramatically, right? It's been effective at doing that. That's great. The second thing is the speed that this Uber became the biggest taxi firm in Kenya. It happened in 4 months, from nothing. And what I think was we're in this space in the economy where things can happen dramatically, enormous opportunity to make exponential opportunity to create businesses that are going to make enormous impact and profits. And we're seeing this in many, many different places in our economy. So it's very interesting to watch. We have an old-fashioned economy and we have this new Uber economy. And the question is, what's going to happen next? And what I can see is it's going to spread out. We're going to see more things happening. And really there's an opportunity here which doesn't happen that often to hopefully ride this wave and pick the right spots. Our economy is much more diversified than most African economies, and this is from Moody's, and it gives you an indication of the level of diversification in the economy. And this is why when people keep saying, Kenya's resilient, they mean this. We're not, we're not 80% dependent on oil or 60% dependent on copper. We have a reasonably diversified economy, and this has held us in good stead. This is where all the oil economies are trying to go now. They didn't do it before, they're now trying to do it. Everyone argues about how big the middle class is. Moody's came out with some data which was quite interesting. They estimate the middle class in Kenya is about 400,000 people. And by middle class, they mean people who have consumption of between $8,500 and $42,000, which is a lot of money when you think about it. But what the point is that's being made here, it's expanding, it's growing, and I think this is probably underestimated as of right now. But it's expected to grow it's expected to grow to about 1.1 million in 2030. Our economy is 50% services, which is the highest service quotient out of any economy in sub-Saharan Africa. So just to keep that in mind. If I can touch on a few things, 1-year T-bill rate. People talk about interest rates going up last October. This is the government, right? You remember what I was saying about credit spreads. You can't borrow less than the government. Why did our interest rates go up? They went up because last year in October, the government borrowed money for 1 year at 22%. So all the banks had to reprice their loans at that time because that's what was governing the price of money. So a lot of the frustration that people have felt about the banks was driven actually by government borrowing. And therefore, that's one point to consider, that if that happened again, would the 14.5% cap work? No. As I was saying, Uber, the biggest biggest taxi company in Kenya, and of course, SportsPesa. I don't know how many people bet on football, but just to also touch on SportsPesa, which is another phenomenon. If you look at it, they estimated 20% of M-Pesa money market movements were SportsPesa related. Bob increased SMS capacity threefold about 2 years ago, and everyone kept telling me, Aly-Khan, what's he doing? WhatsApp is here, SMS is dead. Today, just SportsPesa use up all his capacity. I need more. Isn't that incredible? These guys, when I saw their numbers, which was about 4 months ago, were making 20 million euros a month. What are they making now? So this is another example of extraordinary situations which are developing in our economy, and we need to keep on top of that. I'm happy to take lots of questions, but I think we're on the up, and let's keep it there. That's my view. Thank you.